9.5 trillion US dollars. Yes, this is the net worth of overall assets under management by BlackRock, world's leading mutual fund company. Pushing back Vanguard and Charles Schwab, BlackRock became number one globally in June 2021 with 9.5 trillion US dollars of assets under management. You may be thinking why I am saying this. BlackRock, Vanguard, Charles Schwab are the giants of mutual fund. And this is the topic for the day today. In today's video, we will learn all about mutual funds, how they work, their pros and cons, and many other things. Hi all, my name is Dheeraj Vaid from wallstreetmojo.com, the home for most authentic place to learn finance and accounting. Let's get started. First thing first, what is a mutual fund? Mutual fund is an investment product where the money is collected from a group of investors and is used to purchase, think of stocks, bonds, gold, and other asset classes. And professionals like fund managers manage these investments. And whatever gains, happen from these investments are basically returned to the investors. So what happens in a mutual fund? How does it work? Let's understand this with the help of an analogy. Imagine you have some apple seeds and you plan to grow them as trees. You have basically two options. One, you plant the seeds yourself, or two, seek help from a farmer. I presume you may be like me who may not know much about farming, so you decide to take help from a farmer. He takes those seeds, plants them in appropriate soil and at different places in the field and takes good care of them until they grow out as trees. Also, the farmer takes these apple seeds not only just from you, but also hundreds of others who want the same apple trees. In this example, think of apple seeds as the money that you have invested, and the farmer represents the fund manager of the mutual fund firm. The apple plantation is the investment made in different stocks, bonds, golds, and other asset classes. And this looks pretty beneficial, right? You give seeds, the farmer plants it, and you enjoy the harvest. Well, it may not be the same. As you hope for the harvest, you will have to bear with the problems that arise along with it. Say, for example, there are no rains at all, or the weather is not right for the harvest to grow. The apple tree may not grow in such conditions. Similarly, think of mutual funds. It is also subjected to something called market risk. If there is a crash or a boom in the market, it will directly impact your gains and losses. But you should not worry in the case of mutual funds because the risk is reduced as it gets diversified. So when you invest in a mutual fund, your money is not totally just dependent on a single stock or a bond. Your fund actually gets collectively invested in various different investments. If one stock loses, the loss is compensated with the gain in the other stock. So this is the primary benefit of mutual funds. Now let's say all the trees have grown very well and it's time to harvest the apples. Now the farmer helps you gather it, right? And he demands a certain amount of apples as commissions, since he has taken good care of the farm. Similarly, think of the fund manager or the mutual fund company. They charge something called management fees, transaction fees, sales load. The management fees is all about, fees related to managing your funds. However, think of transaction and sales load related to, buying and selling of shares. Whenever you invest in a mutual fund, it is actually very important for you to go through the firm's prospectus. The prospectus is actually a document that contains everything in terms of objectives, fees, the minimum investments, the performance, history, think of risk appetite, everything. And one more important thing that you should note here, just like in the apple seeds example, when the apples are ready for harvest, you can regularly harvest them or sell the apple trees altogether at once. Similarly, in mutual funds, you can book your gains in the form of capital gains or take regular dividend payments. Before deciding how to invest in a mutual fund, you should know the features. In most cases, a mutual fund company may hold up to 40 to 100 stocks and are based on the investment objectives. Obviously, this number may vary from mutual fund to mutual fund, but mostly, they have a large number of stocks. Some mutual funds are immensely diversified, on the basis of industry. It could be large caps, small caps, mid caps, etc. So you can invest in a mutual fund according to the risk that you are comfortable with. So how do you buy a mutual fund? To buy a mutual fund, basically you have to invest in something called mutual fund units, whose value is captured by NAV, or the net asset value. Now think of mutual fund units as the total number of trees in the apple plantation, and the net asset value as the average value of each apple tree. So how do you calculate the average value of each apple tree? First, you need to calculate the total value of apple plantation, deduct farmers' expenses, and finally divide it by the total number of trees that are there in the apple plantation. Similarly, the NAV, or the net asset value, can be calculated by the total value of investments subtracted by the fund management expenses, or all the expenses which are there related to the mutual fund, and then divided by the total number of units. So just remember, as the value of the portfolio investment increases, the NAV increases, right? And if the value of the portfolio decreases, the NAV goes down as well. Now it's time to analyze the advantages and disadvantages of mutual funds. Now, some of the advantages of mutual funds are as follows. In the long run, mutual fund will provide better returns compared to the cash that you have in bank or the fixed deposits. Another advantage of mutual fund is that they have something like a systematic investment option where you can invest at regular intervals. This makes it apt for the middle income classes to invest. Another advantage is that they have something like an open-ended funds, that doesn't come up with any lock-in. So you can invest and take it out at any point in time. So it provides greater flexibility and liquidity as well. Another advantage of mutual fund is that there are certain mutual funds classified as tax advantaged mutual funds. When you invest in them, they'll reduce your tax liabilities overall from the income. As there are pros, there are cons as well of mutual funds. Mutual funds are not resistant to market fluctuations. So if you have not analyzed the mutual fund before investing, it may lead to heavy losses. Another disadvantage is that the fees and the charges that they have are kind of independent of the gains and the losses. It's kind of fixed. So your gains will be further reduced due to these fees as well. In a nutshell, investing in mutual fund is actually a wise choice, but you need to really understand the investment objectives, risk appetite, and then only you should invest in the type of mutual fund which you like. Most of the mutual funds are actually beneficial as well if you keep it for a long time. Just like that apple tree example, you'll have to wait for the trees to grow so that you can get more apples. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future video, then you may do so by writing about it in the comments section. Also, we come up with very interesting videos on finance and accounting topics regularly. So if you haven't subscribed to our channel yet, please do so by clicking on the subscribe button below so that you can get the notification as soon as we release the latest videos. Thanks for watching. Have a nice day.